All right, so we're looking at errors and error corrections. All right, so usually what happens is you're going to hear about something what is called a suspense account. All right, this is where you place an entry if you do not know where to place it. All right, it's like a temporal resting place for an entry until you find the correct place to place it at. All right. And then there are two reasons why the suspense account could be opened. Okay. Number one, you are unsure where to post an item. All right. As stated here, you're unsure where to post it. So you need a temporal place to post an entry. All right. And the second reason why we use the suspense account is when there's a difference in the trial balance. Right. You find what the debit side and the credit side, they're not agreeing. All right. So what we're going to first do is first we're going to learn about all the errors, all right? Some errors won't need the suspense account, okay? And some errors also do not affect the trial balance, all right? But some errors will need the suspense account, right? So for the first, we're going to look at our first three errors, right? Error of omission, where a transaction is not recorded. All right, for this one, there is no need for a suspense account. All right, how to fix this error is you just record the transaction. All right, you just do the journal entry. All right, this error doesn't affect the trial balance because if you forget a certain entry, all right, you might find the trial balance still balances minus that certain entry. Okay, so we'll be looking at them one by one. So we'll start first with error of omission, where a transaction is not recorded at all. All right. And how to fix it? You record the transaction. All right. So here's our first one. All right. It says we purchased goods worth 800. All right. And this was omitted from our books of our accounts. All right. We never recorded this entry. So who remembers the journal entry for purchases? When we purchase goods, what is the journal entry? Let's identify which two accounts are involved in this journal entry. All right. What two accounts are involved when purchasing goods?
Purchase account and cash account.
Correct. All right. So what type of account is the purchase account? And the cash account, what type of accounts are these? Purchases is an expense, cash is an asset. All right. Purchase is an expense and cash is an asset. So whenever we purchase goods, all right, money is coming out of our pocket. So we have a reduction in an asset, which is cash. So what do we do when we have a reduction in an asset? Do we debit or credit? So check on that thing I told you to draw that we credit. And purchases, since it's an expense, expenses increase with what? Expenses increase with debit. All right. Just remember every time you have an expense, the rule of thumb is just debit. Okay. So here's the journal entry. Okay. You debit purchases and you credit cash. Okay. And that's how you have fixed that error. Any questions before I go to the next example? Okay, a payment of 3,500 was made to a creditor but omitted from the books. All right. A payment was made to a creditor but omitted from the books. All right. So for this transaction, what two accounts are involved? Who is a creditor? A creditor is someone we owe money, and someone we owe money is a liability or a payable, right? Remember that. People who owe money, those are our payables, all right? And payables, the type of account for payables is their liabilities, right? And since here we've made a payment of cash, so the two accounts which will be involved here is our cash and our payable. Cash is an asset, our payable is a liability. All right. So whenever we make a payment to someone we owe money, all right, since we are reducing the amount we are owing them, we have a reduction in our liability, right? So when we have a reduction in our liability, what do we do? So check on that A equals L plus C. When we have a reduction in the liability, what happens? Hello?
We debit.
Yes, we debit. All right. And cash is an asset since we are paying.
We
So,
debit.
yes, cash is an asset. So, since we're paying, so we're reducing the asset. What happens when we reduce an asset?
We credit.
Yes, we credit. So, we are going to debit our payable, okay, or our liability is creditor. Should I put here payable? It's 3,500 and we credit cash. Any questions before we now move to the era of omission? Because era of omission is the easiest. You just do the journal entry, okay? You just do the required journal entry and you're fixed that error.
Um, I don't understand why the payables are on the debit side, because if they are liability, they should be on the credit side, isn't it?
But it's a reduction in our liability. Whenever you're paying someone you owe money, since the money is reducing, that's a reduction in your liability.
Okay.
Okay. So don't worry, I'll give you some questions to do on these errors which you look so that you your journal entry skills and error correction skills become better, right? Okay. So let's look at an error of commission, all right, where an item or an entry is entered to the correct side of the wrong account, right? And an entry is entered on the correct side of the wrong account, all right? Here we do not need a suspense account. And how we fix this, we remove the transaction from the wrong account and put it into the correct account. Okay. So here again, you have to know your journal entry skills because there will be a wrong there'll be a wrong entry on the wrong account. So you have to know which account it's supposed to go to. Okay, so let's start here. Okay. A credit sale of 5,000 was entered in J Limited's account instead of O Limited's account. Okay. It's entered in J Limited's account instead of O Limited account, right? Both of these are receivables, but we put it on the wrong receivable, all right? We put it on the wrong receivable, okay? So what's going to happen is, let me illustrate this one. So a credit sale has been made to J Limited. Or if I switch to the board, the video will be stuck. So, okay, I have to use Microsoft Word. All right. So according to this, the entry was like this. All right. Whenever we make a credit sale, do we remember what two accounts are going to be involved in a credit sale? You have sales and your receivable. Receivable is someone who owes you money, and someone who owes you money is an asset. Right? Sales is a revenue account. All right. Remember, sales we record them even though we haven't received the money. Okay. So what happened here is we made the credit sale. All right. We put it on J Limited. All right. Because when you make a credit sale, yeah, acquiring a new receivable, that's like acquiring a new asset, and an increase in an asset, you debit, all right? And since you've made a sale, remember, revenue increases capital, so the sales will be credited, all right? So here, what has happened here is that we've put 5,000 day limited, all right, and sales 5,000. Right? So now what happens here is that we have it wasn't supposed to go to J Limited, okay? It was supposed to go to O Limited, all right? So what happens here is this. Let's use T accounts to illustrate this, all right? So J Limited has been debited 5,000, right? And sales have credited it 5,000. So what we're supposed to do here is we have to remove this amount from J Limited's account and transfer it to O Limited's account. All right. We have to transfer it to O Limited's account. So the way we can do that is we're going to have to credit J Limited 5,000 so that this amount is cancelled from his account. We credit J Limited and we're going to have to debit all limited. All right, all limited 5,000. So here what it means, this has been rubbed off J Limited's account and we've taken it to all limited's account. Are we okay with that?
Yes.
Yes. So to
Yes,
fix,
sir.
okay, so to fix it, I think, did I type it already? So to fix it, you you credit J Limited and you debit O Limited, okay? So that O Limited, debit O Limited, 5,000 and you credit J Limited. Right? Sales account is already okay. It you don't have to, it's just that you have to remove this amount from J Limited's amount so that O Limited has the money so that we are okay with it. No, I already put here to fix this. Yes. Right. So I've also put in the T accounts for for you guys to see what's happening. We've seen credit J limited, so that we remove it, and debit O limited. Yes. All right, here's one we can try. A payment of 1,500 from a debtor was entered in the account of Mark. All right, payment of 1,500 from John, a debtor, was entered in the account of Mark. All right, so this is a case where a receivable is paying you. All right, a debtor, receivable, people who are owing you money. All right, so can we try this one? Can we try this one? What's the journal entry whenever a receivable is paying you? When someone who owes money is paying you, what two accounts are involved first? Let's say what two accounts are involved.
Payable and receivable.
Receivable, yes, and also cash, because the payable is a liability, so not a payable, but cash. Because remember, you're receiving cash from a receivable. So it's the receivable and the cash account. All right. And both of these two are asset accounts, right? So which account will be reducing and which one will be increasing? Someone who owes you money is paying you. Okay. That's like a reduction in an asset, right?
Because account reduce.
Yeah. The receivables account reduces, yes. The receivables. So what happens when you have a reduction in an asset? Because receivable is the asset which is reduced.
We credit.
Yes. And then cash, since we're receiving money, cash, which is also an asset, since it's increasing, we debit cash, right? We debit cash, right? So here, let's see. So here, what happened was we credited Mark and debited cash. We were supposed to credit John instead, right? So, can someone tell me what would we have to do to correct this error? Right? Here, this is the error here. We credited cash, we debited cash, and we credited Mark. It was supposed to be John here. All right. So what do we do? Can someone try? All right. We're going. Oh yes, please go ahead. Yes. No, no. Here there's no. Here there's no contra entry. There's no need of the contra entry. Here we have to remove this amount out of Mark's account and transfer it into John's account. That's what we have to do. So I want to see if you know how. Can you try how do we do that? So there's no contra entry here. Okay. There's no contra entry. What we're trying to do is we're trying to remove this amount from Mark's account and put it in John's account. All right. So what we're going to do here is we're going to debit Mark's account and we're going to credit John's account. Okay. Because we have to remove that amount from Mark's account. All right. Let me use the board here. All right. We have Mark, and we have John. All right. So we credited Mark. It was 1,500, I believe, right? So we have to get rid of this amount from Mark's account and take it to John's. So to do that, you're going to have to debit Mark 1,500 and you credit John 1,500. All right. So that the amount goes to the correct person. Okay. Are we okay with that? The secret here is the account where it's the
I have
account.
a question.
Yes, yes. Yes, can bring the question forward.
So I understand that we are dealing with the cash account and the receivables account.
Mm-hmm.
So why do we use Mark instead of receivables? How do we enter? Does it mean both John and Mark have their own separate accounts, or how do we use it in that way?
You're asking how would we determine if this person is a receivable or not? Just ask your question one more time. Sorry.
I understand how they are receivables,
Mm.
but how do you? Okay, knowing I know that they're receivables,
Mm-hmm.
but they are still names. So is it that we have a separate receivables account? Then we just enter Mark or John as we are entering in the receivables account, or Mark and John have got their own T account. That's where I'm a bit confused.
Oh, that's where the receivables ledger comes in. The receivables ledger, that's where it has the T accounts of each individual receivable. Okay. Your receivables ledger has all the individual accounts of everyone who is owing you money. That's it. So each of these, John and Mark, they'll be found in our receivables ledger. All right. A ledger is just a group of T accounts. All right. So they have their own individual accounts. Are we okay with that? These guys will be found in the receivables ledger where all the T accounts of everyone who's owing us is found there. All right. That's why we even have control accounts for the receivables because we have to total up everything that everyone is owing us and put it in a control account. Right? Because in the receivables ledger, you have a lot of receivables. Okay. So instead of putting each of them on the balance sheet, you just have to total up in that ledger. You total up and take it to the control account. Right? The control account handles that because in your receivables ledger, there'll be many people who are owing you money. Same as your payables ledger. There will be many suppliers you'll be owing money. So you have to total up the amount you're owing in total into your payables control account. I hope I've answered your question.
Yes, thank you.
Yes. So any questions on this era of commission? Is there another example here? All right. Here are the T accounts. Yeah. So here's one you can try. A payment of 700 kwacha to a creditor X Limited was entered for H Limited. All right. Is we made a payment of 700. Instead of putting it on X Limited, we put it on H Limited's T account. So Let's walk through this together, right? Can anyone identify what the transaction going on, the types of accounts involved, which ones are increasing and which ones are decreasing, all right? And then after it tell us that, then we see you want to see if you can tell me how we fix this error. Can someone give it a shot? What?
There's a cash account and the payables account involved.
Yes. So which one is increasing and which one is decreasing? Sometimes both can increase and
The
both.
cash account,
Mm-hmm.
the cash account is decreasing.
All right.
Because we are losing a 700.
Uh-huh.
Then the creditors are reducing because we are paying a debt.
Yes. So both accounts are reducing in this case, right? So cash is what type of account? And
So in this,
continue. I just want you to tell me that okay, cash is this kind of account. So since it's reducing, we do this. The payable is this type of account. So since it's reducing, we do that. I want you to speak in those lines.
so the cash account would be credited with the
Yes.
700.
Yes.
Then the payables account will be debited with the 700.
Yes. All right. Since payables are a liability, and if you check on that diagram I gave you, a reduction in a liability is debited. Cash is an asset. A reduction in an asset is thing credited. Okay. So you refer to that diagram. Now here in this case, instead of debiting X limited, we have debited H limited. Okay. Instead of debiting X limited, we have debited H limited. So now how do we fix this error?
We would have to credit H limited.
Yes.
So that we cancel the money.
Uh-huh.
Then debit X limited.
Correct. Okay. And that's what you do here. Are we okay with these, colleagues? Any questions or queries? Here it's just do the opposite entry to fix it basically. Okay, it's just doing the opposite entry. Okay, so as you can see, oh, I don't know why I put 1,500. That would be 700. Oh, any questions or queries? All right, we go to error of principle, which is just similar to this one. The only difference is instead it's a thing you post the entry to the wrong type of account. All right, the wrong type of account. Okay, not just the wrong account, but the wrong type of account. Right, no need for a suspense. It doesn't affect the trial balance. Same way to fix it, remove the transaction and put it into the correct account. All right, so here's an example. Same same format, all right? Let's say here a payment of 3,300 for motor vehicle expenses was entered in the motor vehicle account. All right. Here, motor vehicle expenses, that's an expense account, right? Motor vehicle, this is an asset account. Okay. So the correct entry was supposed to be you credit cash because your cash is an asset, it's reducing, so you credit it. And then you debit the expense, motor expenses. Okay. Remember, debits, the rule of thumb, I mean, expenses, the rule of thumb, expenses are always debited. Okay. That's the rule of thumb. Whenever you see an expense, just know that expense is being debited. Okay. Yes. So here, what's going to happen is we have to remove this 3,300 from the motor vehicle account, all right, and transfer it to the motor expenses account. Okay. So, like the same as previously for the error of commission, we'll credit the motor vehicle account 3,300 and we'll debit the motor expense account 3,300. Okay. Same format, just that this time you've put it in the wrong type of account. All right. So you credit the motor vehicle account 3,300. That removes that amount from the motor vehicle account. And you debit the motor vehicle expenses account 3,300. Okay. Oh, I haven't put the tier accounts there. Because usually these questions, when you're correcting errors, right, in your solutions, you don't need to put the tier accounts, but for your sake, we have to illustrate this so we're seeing it visually. Okay. Because it's just not good, you just put the journal entries, that's all. Any questions? Right. Payment of 3,000 to a creditor was entered in a receivables account. Right. So we've entered it in the wrong type of account. All right. In error of commission, there they were both receivables, they were both payables. We just put it in the wrong receivable account. Now here there's a payment to a creditor, but it's been entered in a receivables account. All right. Maybe let's add some names. Let's say M Limited. Right. So to make this error look true, let's say the receivable is also, let's say, MM Limited. So the bookkeeper got confused. Right. So let's discuss this one. We're paying a creditor, someone we owe who is a payable. So what is the correct journal entry supposed to be for this? When we're paying When you're paying a payable, what happens? Which two accounts are involved? Which account is increasing and decreasing? Are we there? When you're making a payment to a payable,
When we are paying the creditor,
yeah,
so if we are paying to a creditor, the cash account is decreasing
hmm,
and our liability is reducing.
yes. So which one do we debit and which one do we credit?
So we um we credit the payables account. We credit the cash account and debit the payables,
Yes,
the payable account.
yes. So here, what has happened is the mistake we've made. We've debited the receivable Limited. All right. We're supposed to debit the creditor Limited. So how do we get rid of this error? What I'm going to have to do?
You need to credit it as well, the receivable, so that it cancels.
Yes.
Then debit the correct account instead.
And what's the correct account?
The correct account being M Limited.
Yes, Limited. Yes. All right. We just put the T accounts. Any questions, colleagues? All right. So let's just put the T accounts so that we see how the accounts. M Limited. Yes, they were debited the 3,000, which they were not supposed to have. So you credit to remove that 3,000 credit, but you debit Limited. Limited 3,000, right? And Limited, this is the payable, right? Whenever a payable is reducing, whenever a liability is reducing, you debit, all right? Yes. Okay. Here's one. Purchase of equipment 2000 was entered in the stationery account. Right. Whenever we're purchasing equipment, what two accounts are involved in this transaction of purchasing this equipment of 2000? What two accounts ideally are involved, because here there was an error. Instead of entering in the equipment account, we put it in the stationary account. So what two accounts are involved in this one? Purchase of equipment 2000. Because as you are looking at these errors, first you have to be aware of the correct entry that should be there. Right? Because if you do not know the correct entry, it's not, it won't be good, because now even the you won't even know how to correct, you won't correct it properly then. So when you purchase equipment for 2000, where does it go? I think I'm going to start calling names now. We have been too quiet. Maybe since we're at work, Mrs. Chishimba, we've purchased equipment. What do we do? What is the correct journal entry?
Increase on the assets.
Huh?
There's a cash account involved, and I think the other is expense account.
Mm, where is the we're purchasing equipment with money. So the
Okay,
equipment,
the purchase. So it's
you have the equipment account and the cash account. Okay. We've got the equipment account and the
okay.
cash account. Both of them are assets. Can you tell me which one is increasing and which one is decreasing? And then also, you tell me what's debited and what's credited. Because we have to know first the correct entry, then we see the mistake which was done here, and so that we know how to fix it. Okay, that's how you have to look at this. Know first the correct entry. Okay, and then yeah. So which one is increasing and
The equipment is increasing,
yes,
so we're going to debit the equipment,
yes,
and the cash is
mm,
increasing. We're going to credit the cash account.
yes, yes. All right. Yes. So now in this case here, what happened is we instead of debiting equipment, we've debited stationary account. All right. Stationary account, we've debited 2000, and cash, we've credited 2000. So how will we correct this error? We have to remove this 2000 from the stationary account and take it to equipment. Right? This is the error here. So how do we correct this error?
We need to credit the stationery account with 2000,
Mm-hmm.
then debit the equipment account with 2000.
Yes. All right, colleagues. That's all you have to do. Okay. Okay, so I have to look. So we've looked at three errors. I have to give you. an exercise to see, to make sure that you have understood. Okay. You have to test your journal entry abilities. All right. We are meeting also at night today, 19 hours. Well, actually, we're meeting 20. Let's meet 20, 30. Can we meet 2030 up to 22? We're still looking at this. We're still looking at more errors. So that at 18 hours, I'll be busy 18 up to 19. So I just need at least 20, because that 20, 30 accounts. So here, stationary account. Yeah. So for this afternoon session, we can end here. Oh, it's 2000 here. Are there any questions or queries? So let me resend this document.